Okay. So the IPO S1 form, what does that mean? So whenever a company go public, they have to file the form S1. S1 will, you know, when a company is private, you can never know, they don't have to disclose anything, right? They can do whatever they want. But when a company go public, it has to be from the black box to a transparent identity, right? So yeah, you guys know, the firms when go public, they have to disclose a lot of information. You have heard the recent news about a Chinese company Didi. When they go NASDAQ, they have to file all this form S1, and it has some information about the transactions the Didi has about the traveling information, which can be sensitive, right? Which can be sensitive. You guys have heard that news. So when firms go public, they have to file the form S1, includes everything about firm performance, customers, suppliers, competitors, risk, everything about the firms, and want to convince the market, I'm a good firm to go public. This is the purpose of S1 form. The S1 form is to want to convince the market, I'm a good guy, I'm a good guy to go public. You guys can finance me. So that's the content of the form. What's the structure look like? I will talk about later on. So what we use this form for, you normally for two things. One is for the IPO pricing. So what the first day pricing is kind of important. Like whenever one company go IPO, the first day pricing, the first couple of days pricing is important. You want to predict that. Well, you want to predict that, right? So so the US IPO is different story. You can buy the IPO pre-IPO, so you can arbitrage the price. I know in some countries, in China, it's a lottery. I don't know if you guys do that. So basically, if you if you only buy IPO, you have to get a random draw. Like if you want to go buy a IPO one company, this kind of lottery, you have to win a lottery in order to buy like 100 shares of the IPO. That's the practice internationally. But in the United States, you can actually most of institutional investors will do the pre-IPO, but retail investors sometimes they can participate as well. So we want to predict the first couple of days IPO pricing in order to understand how successful the IPO is, and the information we should rely on is the Form S1. And also another important thing is the post performance. You are not just care about the IPO the first couple of days. You want to care about after 3 years, 5 years, how is the company doing, right? You want to do that. So this is also the S1 form S1 is helping you for two things. One is the IPO day pricing. Another one is the post performance long-term wise for the following 3 to 5 years. That's the two purposes of the IPO form S1. So let's look at what do we have from the IPO. First, the summary is about everything, right? I'm just the business operations, blah blah blah. The summary, risk. You're not just talking about good things. People want to hear about the risk of the firm, so you have to talk about risk, and also forward-looking statement. I told you guys safe harbor rule. Anything about forward-looking will be protected by the safe harbor rule. And about the industry, you're not just talking about yourself. You're talking about your competitors, right? And you're talking about the cash flow. You're talking about dividend. You're talking about the market size. You're talking about the financial data. This is important. You talk about your financial conditions. You talk about the management. You're talking about the corporate governance, compensations. You talk about personal transactions. You're talking about the ownership. You're talking about the futures. You're talking about the tax. You're talking about who is underwriting. Is Goldman Sachs helping you or JP Morgan? You're talking about legal issues. You're talking about other stuff. And so you can see that this kind of annual report, that you feel like this is like annual report. But the difference is annual report is for public firms who have already go public. This is the annual report for private firms who wants to go public. They want to discuss the information so the market understand the potential of the private firms. So and you can see the information here is quite important. Okay, you can see it's a summary. They're not talking about good things or talk about the risk. They're talking about a lot of stuff. I'm not going to repeat here. So it's in summary, it's like annual report in a much detailed way. I take it back. I don't think it's annual report. I think that this is like annual report plus AK plus proxy statement. Does it make sense to you guys? So this is not annual report. This is annual report plus AK material news plus proxy statement plus everything. I feel this is because in a public firm, they have to file 10K, have file, AK have file, conference call, file, proxy statement. I feel this is the combine of everything for the private firm. I take it back. That's the correct way to describe it. This is a combine of 10K, AK, proxy statement, everything. So you can find all kinds of information here. And how do you use the information? Like I said, IPO pricing and the post performance. Yeah, and this is you see the financial data. Like in the past couple of years, how did they work? You have cash, they have liability, payables, blah blah blah. This is their financial conditions. You can get the information about that, about the private firm, and also risk. I want to talk about the risk here. The reason is everybody can talk about good things, right? Everyone talk about good things, but risk is what you guys should be pay attention to. You have to worry about risk. That's what sophisticated investors should be care. What's the risk of this IPO? The risk of IPO. And another thing is you can see that they're not just talking about themselves. They're also talking about their competitors. They're talking about their industries. So this is about the this is also different from the disclosures. They are not just talking about themselves. You can see here. They're talking about the industry. They're talking about they're talking about industry. They're talking about competitions. They're talking about the underwriters. These are all unique for the IPO firms. So just to summarize, what is IPO S1? IPO S1 is when private firms want to go public. That's the information they disclose about the private firm to convince the market where the potential of the private firms. And the information here covers everything, covers the financial data, covers the corporate governance, covers competitors, covers product, covers business, covers everything, covers compensation, covers who are the underwriters. And you can use that for two things. One is to predict the IPO pricing. Another one is the post long-term performance. And I want you guys to focus more on the risk side. Everybody talk about good things about themselves. Everybody talk about that, even ourselves, right? You always talk about good things about you, but if someone talking about some concern they have, this is something you guys should pay attention to. Yeah, this is about the IPO. This is about IPO one.